Hello, everyone, and welcome to the Meza Wine Investing Series, where we debunk everything false narratives about the wine investment market. So today we have a special guest. This is a special guest to me because this is a beloved friend, Mr. Johan Marlin. Welcome, Johan. How are you today, man?
Siva, thanks for having me. All's well. It's we're moving into spring almost in the Cape, so winter's almost over. Things are going well, thanks. How about you?
Things are picking up. Definitely, man. So it's so interesting how we met because I remember when I got into the market and I started to talk to industry experts. Every time I went to a meeting, I felt dejected. And when we started talking, because I got dejected because of the reality of the market, and then when we talked, you were pretty much truthful and honest about everything. I also felt dejected then. I left the meeting feeling so good because it was such a great meeting. It was so great talking to you, man. So I think that just says a lot about your personality and who you are, man. So please just tell us about your journey and how you became a wine investment specialist, Johan.
Siva, thank you for that. Thanks for the kind words. The market, just quickly, the market is definitely under pressure.
Yeah.
As things go, things go in cycles. So I'm cautious to call myself a wine investment specialist, although I guess that is what I do on a day-to-day basis. But no, I spent a year on a farm working on a wine farm after school, which really piqued my interest in fine wine. And I did everything on the farm that, as you would, from harvesting to doing fermentations and pruning vineyards during winter time and all of that. And then I started buying wine for myself, just out of my own curiosity and interest in wine. So tasted as broadly as I could, as my budget allowed, of course.
Definitely.
And then I started trading a bit of wine for myself. I recognized in the market at that stage that there's not a lot of older wines available, and there's not a proper premium in the market yet for older wines, which to me felt counterintuitive. One of the great things about great wines is that they need time. And so if you do pick up older wines that have been properly looked after or stored, they should have a bit of a premium, because as a consumer you can already enjoy those wines. You don't need to leave them for a longer period of time. And by that stage I was a client for wine at Wine Cellar, and an opportunity arose for me to start working with him. And so I slotted in and I started working with Roland Peens. As they say, the rest is history. So I've been working in the space since, and I think it's a very, very cool industry to be involved in.
Definitely, Johan. Because it's so interesting hearing stories about how people got into the industry, because this industry is not really mainstream per se, in a financial point of view. So not a lot of people know about it. So hearing stories about how people got into the industry, it's so fascinating to me. So that was a beautiful story, Johan. Definitely to hear. So one thing that we're focusing on with this series, we really want to debunk false narratives that people and funds are pushing about fine wine as an investment asset class. So one thing I want us to talk about right now, from your work that you've done, what are the real benefits of investing wine that you've seen as a person who works on it day to day?
Well, I think these two approaches to considering wine as an asset class or investing in wine. So if I can quickly define those from my perspective, I think the first would be investing in wine purely as a consumer, and that investment would entail buying wine at release. In other words, when it's released by the producer or through the distribution system into the market, and then keeping those wines, professionally storing them, or if you've got a great cellar at home, looking after the wines for a period of time, and then just enjoying them once they mature and once you want to drink them. And the reason why I think that is an investment approach into drinking great wine is, as the market is maturing in South Africa, we find that older vintage wines are available on the market to drink, but they are actually now carrying a premium. Which means that if you had to buy wine on release and just keep them yourself or store them or have them looked after, by the time you want to drink them, because of the inflationary nature of our economy, you should be drinking wines that were much cheaper at release, and with the storage cost even likely than what they would be if you were to go and look for older bottles. And that's of course if you can find older bottles, because if you're looking for great 2005 or 2009 or 2003s from South Africa, you can find some, but it's not like they're around, on every corner of the street, just because of the nature of how fine wine works. So I would say, as a consumer, that's a real benefit, to investing in wine is you're basically drinking great wine at the best possible price, and then investing in wine as a pure financial value storer, if I can use such a word, is simply it's a physical asset. So to that extent, let me rephrase it. It's a physical asset, but with actual demand to it, which is consumer driven. Whereas other physical assets, the nature of demand is a little bit different. Gold isn't consumed, or other commodities or other metals rather aren't necessarily consumed. So wine has a diminishing supply curve over time, which means that as long as demand for a product remains, the very simple economics of it would be that over time, supply would be much lower, which means on that same supply and demand curve, the price would be higher. But what I find, or what we've seen with the world's great wines, is that as they become more revered over time, not only does supply diminish, but the demand curve itself actually shifts. There's greater demand. On release, if I have to use a very simple and maybe overused example, but I still think it's very relevant. If you had to look for great Bordeaux first growth from the 1982 vintage in the early 80s or in the late 80s, they were easier to find, number one. And number two, the vintage itself wasn't as lauded, even though it was a bit of a watershed moment for Bordeaux. Whereas today, 82 Mouton and 82 La Fleur and 82 Lafite and 82 Latour are some of the most exciting and lauded wines that have ever come out of Bordeaux. And to that extent, there's great demand for those wines. So if you look at it, it's not only that supply has dropped, but there's also a demand. And that would result just logically in a higher price. So you've got two drivers of price, the diminishing supply, and I believe over time a growing demand. And as a physical asset, I think that's very attractive.
Yeah.
And then, of course, another benefit which is maybe not measured in monetary value is I think it's very exciting for me personally. Of course, I'm subjective, I'm involved in it myself, but in investing in wine, I think it's very exciting to chat about vintage variation and, how the wines express themselves differently through different vintages. And even from an asset perspective, I think that's very exciting. Whereas I haven't encountered the same degree of interest or excitement when you speak about copper or gold, or I'm sure equities traders will of course differ from me in how they see excitement in the market with Nvidia or with Apple or whatever. But I think that's just a real exciting part for me of fine wine and investing in fine wine.
The first time I figured I found out about fine wine as an asset class, I think that was the most intriguing part, because it's so much more interesting talking about fine wine at a dinner party than talking about gold and property. No one really wants to talk about that in their portfolios.
Sure.
Because fine wine holds such an emotional value to people, and most people have a lot of memories with fine wine. So investing in a passion asset, I think that's a totally different element that adds to fine wine that's very different from other assets, and most assets can't have. So I do think that's such a special feature that fine wine has that differentiate fine wine from other asset classes. But one thing that I definitely. But one thing I do want to talk about, Johan, because most people understand the investment cycle of other asset classes, like equities mostly, because they're so mainstream. People understand the kind of due diligence that you need to have in order to pick certain stocks. So one thing I want us to talk about right now is the wine investment life cycle. So from sourcing to managing and exiting your position. So I wanted to ask, what are you looking for when you are sourcing investment grade wines from various channels in order to create a portfolio?
That's a great question, and that's critical, of course, in putting any portfolio together. There's a simple definition of what fine wine is that someone once used, which I think is very relevant to this question, and that is fine wine are wines that are traded on the secondary market. If I can start with that, the reason why I think that's critical is because wine is a passion asset, people often misunderstand or can easily ascribe value to wine because it has the romanticism of aging and drinking old wine. But not all old wine constitutes investment wine. If I buy a case of red wine from a friend or whatever. I live here in the Cape, so if I've got a friend who has a little vineyard and I buy 6 bottles off them and I just leave it in the dark for 10 years, that doesn't necessarily constitute an investable wine just because it's red and because I've kept it.
Yeah.
To that extent, wines that have visibility of trading, I think, is critical when selecting wines as an asset class. An active secondary market would, of course, then be critical, which in the case of the local South African market, we are still at the early stages of the fine wine secondary market, even though I think there's certainly growth and there is a maturing element to our market. But so you need to identify wines that people would actually be willing to pay for over the course of time. And in that regard, if the question is, well, who do I trust to make a wine investment for me or buy wine on my behalf, then I'd say it's critical that whoever is involved, who is helping you with that, has an understanding of also how to liquidate wine. In other words, how to exit that position, as you say. Because on paper, it looks very attractive to say, I've got 2005 Canon Paul Sour in my cellar, or I've got 2003 of this, or 2001 of that, or 2009 of that, or 2015 of this. But if you can't turn that position into cash again, then that investment really is irrelevant. True. It just becomes a nice passion asset, as you alluded to earlier, that looks great on paper, but it has no real intrinsic value. And I think that's one of the challenges in the local market, is exiting positions effectively, because our market is still relatively small.
Yeah.
In a more global context, I think the advent of a company called Livex, the London International Vintage Exchange, they've been critical in establishing greater visibility and transparency in trading wines on the secondary market. The numbers they have are pretty impressive. I think they trade more than 300,000 or 400,000 wines with over 875 million data points on these wines, on how they've traded and their price points. So once you have an active market like that, then getting a wine that's in that system, I think, is already a good starting point. Because if I bring a brand new wine to market that no one's ever heard of and no one is drinking, then it's tricky to trade that wine in the secondary market. So it's a bit of a long-winded answer to say that, almost as in property, they'd say, you make your money when you buy. And it's similar in a sense with wine. If I'm buying a wine that's not being traded on the secondary market, that has no current brand equity, that is not well known among the fine wine world's critics, who score the wines regularly and give them critical acclaim, but then I'm already in a difficult position if I'm buying wines that don't tick any of those boxes. So that would be a great starting point. And in terms of the life cycle, I'd say it's buying from a good source, a wine that meets these criteria. Keeping the wine properly stored, of course, is critical to fine wine, well, both as a consumable, whether you're investing to enjoy great wine over time, or whether to liquidate the asset over time. Wine needs to be looked after properly, because it's still a natural agricultural product, which is part of a bit of the romanticism for me of the product itself. And then finding or knowing a channel, or having channels at your disposal that can actually turn that asset then back into a cash again. As I said, otherwise that investment means nothing if I can just show on paper, Sipa, you gave me X and I've done X plus 30%. That seems very impressive, but if I can never realize that X plus 30, or at least the X plus 30 minus trading fees or whatever, then it doesn't really mean much.
That's so true, Johan. Because that was going to be my question. What makes a wine investment great? So that point of the liquidity part, I think that just nails it. Pretty much the whole aspect of it, at what makes wine an actual investment grade asset. If you can't sell it, then it's not worth having, because you might make returns, but they'll just stay on paper. So that is such an important facet to know, because most people probably think that the ones they have in the cellars are probably investment grade, but if you don't have a market for it and they don't have brand equity, then it's pretty much a dud. It's a consumable good pretty much at the end of the day. So that was so great. The insights were so great there, Johan. And I think one thing I also want us to tap on is, because one thing we do know that's very important is the valuation side of it all. You can buy wine, but if you don't know what your wine is worth, then that pretty much doesn't make sense as an asset class. And one thing we do know about the market is that it's so opaque and it's very fragmented, since there are so many different channels. So it's easy to not know the value of your wine if you're an everyday investor, retail investor. You might oversell or, not know the value of
Mhm.
your wine because different channels have their own advantages and disadvantages. So one thing I did want to ask you, Johan, is as a person who creates portfolios, where do you get your pricing data and how do you value the wines in the investment portfolios you manage? Do you use list
Yeah,
prices or transactional data?
that's a very good point, and I think that's really at the heart of seeing wine as a long-term store of
Yeah,
value. It almost touches on the point again. If I have an idea of what something is worth, but I'm not able to achieve that, or at least
yeah,
remotely achieve that, then it becomes irrelevant. Basically, what I think its value is if I'm not able to liquidate that into a cash position again.
definitely.
So what we've done at Wine Cellar for a while, because there is no active secondary market in South Africa as there is
Yeah.
in the UK or in the Far East, or at least not on the same scale, let me rather rephrase it like that. We have taken a view since the start of what will we be able to sell a wine for again. So
Yeah.
if you buy a wine from us for 100 rand a bottle, as a very simple
Yeah.
example, and it's now 5 years later and you're looking to liquidate that wine again, the base for that valuation would be what market price or what selling price will we be able to achieve with a particular wine. So that's definitely the first part of it. So our valuations are driven very much on market selling price. Now, of course, that doesn't constitute the direct return back to the customer, because part of the wine industry is, as with all asset classes, there is a brokerage fee, and in the case of wine, there's a storage element to it.
Yeah.
Whatever is paid, whatever your return is, might not be your net return, because of course you have to look at the storage cost you've incurred over time. So the one part is definitely the market selling price. What can a wine actually achieve on the market? That's been our view. On a larger scale, or in the international market, I think Livex again has done great work in clearing up a bit of the uncertainty or the opaque nature, as you rightly refer to, of
Yeah.
fine wine pricing. A simple example would be if you choose a well-known wine, Pichon Comtesse from Bordeaux, or even top-end wines from Burgundy like Rousseau or Romanée-Conti. If you would search for pricing on Wine Searcher, you would find a spectrum of pricing on the very same wine. And even if you had to have some kind of logistics cost calculator,
Yeah.
the pricing in Hong Kong versus likely what it would be in Sydney, Australia versus New York price, they wouldn't be line priced 100% the same. There will be differences. And of course, that's because I think the consumable nature of the product plays a role. You might just have someone that is willing to pay more, or a certain market that's willing to pay more for a particular wine because the market takes to that wine, or the market
Yeah.
has a preference for a specific region. And in that extent, or in that sense, that market might just outperform other markets in terms of pricing. So there is pricing variation across the globe. And I think finding an average price across the globe is not easy. And again, I have to give credit to Livex. I think they've done a good job just because of how many wines they trade, and it's more and more the case with London's top merchants as well.
Yeah.
If you consider Bordeaux Index or Berry Brothers or Lay and Wheeler, names that are fairly well known because they deal in high volumes of wine. I think
Yeah.
once you've got a trading base of a particular wine, then you can more accurately set a price aside. Whereas if I have to thumbsuck a price out of thin air, that's more difficult. Locally, of course, I alluded to it earlier, the inflationary nature of our market also plays a role. A winery releases a wine for 100 rand this year. Next year, the next vintage of the same wine will probably be 105 rand, and the year after
Yeah.
111, and then maybe 117.50, and then 124.
Yeah.
And if the demand is healthy on that wine, it would mean that the consumer who appreciates older wine or top end wine would understand that drinking a 2017 versus the current release 2022 is actually better, and I'd be
Yeah.
willing to pay a premium for it. And so that inflationary pressure from the producer side also fuels pricing in a South African context, for sure.
Definitely, Johan. Having first-hand data is pretty much the most important facet in valuation, instead of like using not credible sources and then valuing wines and then That's how you trick people, and then that's how it becomes a pyramid scheme. So having that kind of access to that data, it's so important. Thank you so much for lining that out, Johan. I think you definitely did touch on this because I've been having conversations with a few people in the industry, and they always mention investment grade regions like Bordeaux, Burgundy, and when you mention South Africa, they just get so confused when you actually mention that there are investment grade wines in this lovely country of ours. So I do want to ask you, Johan. South African wine isn't viewed as an investment grade region. Why do you think that is in an international point of view?
I think it's very much got to do with our history of
Yeah.
selling and trading wine.
Yeah.
One thing the French are very good at is telling a story and marketing themselves well. And they've had continuity of wine production. Even though we have records of the first wines being produced in the Cape in the late 1650s, the reality is none of those early farms are really in existence as they were. You could argue that Groot and Klein Constantia are very much still the original farms, or at least close to the original lands or vineyards as they were set out. But we don't have the continuity of brand. And one of the great things that really cemented Bordeaux's position in the fine wine world as being a fine wine region was their access to market. And so when they started off the big river in Bordeaux, off the Gironde, servicing the UK market, they've been building those wine brands for a long period of time in that market. And to that extent, because of our political isolation in the mid 20th century, well, up into the late 20th century, it's really only in 1994 or post 1994 that we could really export broadly again to the world. And I think what happened there is we exported from bulk production sweet wines to, let's say, more traditional estate grown and bottled wines all over the world. And it's not that the other wine regions of the world do not produce bulk wine or do not produce lower end wines, but at the top of our pricing or our production scale, I think there's a lot of new impetus that came into the local fine wine industry with the opening up of our borders post 94, with winemakers being able to travel abroad and being to apply international experience and IP into our own local vineyards. We had a bit of that with some links to Germany, but that happened on a much broader scale. And so to that extent, we were very much viewed and are still viewed in many parts of the world as a bulk wine, good value for money producer. But because of this opening up and because of our local winemakers traveling more, and especially at the top end of our production, we are really producing world-class wine. A lot of it is unfortunately still in relatively small volumes. So in the top end wines locally like Asadi family or even Kanonkop, who's producing more and more volume or can produce more volume in a local context than, let's say, a boutique Swartland producer, it's still relatively low volumes compared to Bordeaux specifically. If you think about Bordeaux as a region produces more wine than the whole of South Africa, way more. So to that extent, they've managed to build a strong brand as a quality wine producing region, and they can actually service various markets all over the world. Whereas our challenges are really top end wines. Some of the names that I've mentioned now, you can throw in Alight and the Molyneux and Porcelainberg and some other Stellenbosch producers that are really on the rise. It's still relatively small volume production, which creates a bit of a different narrative, which I think is in our favor, specifically for those producers. But it doesn't necessarily change the perception that South Africa is now considered as a country or within its micro regions, considered as on the same level as Bordeaux or Tuscany or Champagne or Piemonte or Burgundy would be. But I think we're getting there. It'll take some time still, but I think over time we've already seen our top end producers 7-8 years ago, how their pricing for older South African vintages were actually below what we were selling it for locally in South Africa. And now that is now radically changed, where if you buy older vintages of some of these names that I've mentioned in the UK market, if they're around, you're going to be paying top dollar or top pound for them, I should rather say. So it is slowly changing, but it's very much because of our our history as being a bulk and value wine producer and not having a clear identity of where we want to go with our wines that has positioned us in this way.
Yeah, that's honestly great to hear, and I'm so grateful for those insights, Johan, because most people don't even know any of that, and I think that's definitely one of our main missions here at Mez. We just really want to debunk this industry and bring light to all these actual factual narratives instead of these false narratives that are just people are hearing about in the market. So no, I just want to say thank you, Johan, for your time. That was a great session, and I'm really grateful for all your insights. And I'm sure everyone listening will actually agree with me that they learned something from this, and we want that. We don't want people to leave after watching it like they don't know what's going on and not learning anything. So definitely, brother, I just want to say thank you for your time, man. Thank you so much.
No, super. It's always great seeing you and chatting to you, and I want to agree with you that I think fine wine is a terrific product, and it's more accessible than people think. But by the same token, there is nuance to it, as there would be with any other industry or any other product. So
Definitely.
I think the more people understand how the product works and the mechanics of the market and a little bit of our history, you can never separate wine from history. To me, again, it's part of what makes the product so intriguing. Then the better decisions you can make as a consumer and the better for our industries. Great chatting with you and always great seeing you. And hope to catch up soon when you're in the
Definitely.
Cape again for a glass of wine.
Definitely, brother. Definitely, we'll definitely set that up. Thank you, everyone, for tuning in. This was a really great and special episode for me, and I hope everyone learned a thing or two from Mr. Marlin here. So, thank you, everyone, for tuning in, and see you next time.